This lesson I'll be sharing with you exactly how I got into this trade. So as well you can be able to apply this to your personal trading that will shift your trading to the next level. Now, how I got into this trade. Basically, here are few checklists. Number 1, identify the structure, know the trend of the market. And then number 2, mark out your point of interest. Your point of interest can be another block, can be improper price action, which is a fair value gap imbalance. It can be a supply and demand zone, a major support and resistance zone as well can be your point of interest. So you mark out those zones and then you allow price to return into that zone. Then afterwards you will make your trading decision. So how did I arrive at this trade? Price was actually moving in a downward side, and I noticed that here was my lower high and my lower low. Knowing fully that price moved from here and there was a break of structure. So in this break of structure, initially I identified this smart money cube and I marked it out. I marked out this smart money cube and I was hoping that price will return into it, but unfortunately price did not return into my smart money cube. Price came to this level and it went to the upside. So I did not make an entry, and the reason was because price did not move to my discount zone, so I let it slide. I put my Fibonacci retracement and I realized that the pullback only ends around 38 zone of my Fibonacci. It did not get up to my 50 zone, so I don't have an entry because the pullback did not get to my 50, neither has it reached my smart money cube. So afterward there was a push up from here to this upside. So price gave me a new higher low and a new higher high. So I picked up my tools and I marked out this particular order block. So when I mark out this order block, when price left, position my Fibonacci this time to this point, waiting for price to pull into that zone, and true to it, price pull back to that zone. So you can see the retracement. Price retraces back to almost 88.6 of my Fibonacci. So immediately the price return to this zone. Now let me highlight, this is the zone, and then we'll go to a lower time frame where I will be making my entry. So I moved to my 15-minute time frame. Beautiful. So here is how I find my entry. So my 15 time frame, I realized that there is a divergence. So I spotted this divergence on my M15 time frame. So immediately this divergence was spotted, I followed it up with the candlesticks formation in this zone. So when I spotted it, I was patient enough to study what is the behavior of the candles. So let me make this little clearer now. Here, to price return, I first saw this bullish candle. I saw this struggle in between the candles, but when I spotted this rejection here, immediately I was able to confirm my entry, knowing that okay, this is 88.6 level of my Fibonacci. My stop loss will be very small, so the risk is not much. And then I decided to make my entry, and that is how I got in. And even if I'm to make the entry based on H1, of course I did not make it based on H1, but even if I have, here is a pin bar. I just want to show you this. You can see this pin bar candlestick formation that was formed in this zone. This is a beautiful pin bar. You can see this. You can see there's a series of rejection. Price was throwing wicks. That is why it is important to have adequate knowledge of the candlestick. Price was throwing wick, rejection, and then immediately I saw this pin bar rejection forming on 1 hour. And you can see that was those series of candles you were seeing on 15 minutes. I did not wait for it to close. I jumped in with my trade. Because my stop loss was very small, and that was how I get into this trade that is running up to this particular time. So these checklists are very simple. Determine the trend of the market. Very much important. The trend is always your friend, so you don't need to trade against the trend. Determine your trend of the market. Once you have done that, the number 2 things you need to do after determining the trend is for you to mark your point of interest. Okay, so here now, when price left to the upside, I should have had another entry here. I would have marked this zone now of my trade as another block, which is also a support and resistance zone. Now look at what happened. Price went up, pulled back into this zone. Then you can see this bullish move from there. This bullish candle would have been my other entry, and my stop loss is here. I would have still make this second entry to the upside. So you see how this works. So this would have been my point of interest. So next now, I can choose to mark this. This is actually not another block, but I'm seeing a smart money cube here, a particular sign of imbalance. I'm closing my trade already. Yeah, this is smart money. Sorry, this is an imbalance around this zone. So probably this price will be traced into this imbalance and then push to the upside. So you mark out those your point of interest. It can be an imbalance. You wait for price to return into it, and then you make your trading decision of either to buy or to sell, combining your commodity channel index and your price action. And I believe you have learned something new. Thank you for watching to this time. Do not forget to like, share, subscribe, and turn on your notification bell so you'll be the first to get notified of published our next video.